Pendings in Lafayette Parish have plummeted 15% in January. Is the market finally cooling off? Stay tuned to find out. Hey, if you're a homeowner, an investor, or interested in buying property here in South Louisiana, we've got all the data that you need. Hi, I'm Jim Keaty with Keaty Real Estate, and this is your market update. Lafayette Parish has experienced a 15% decrease in pending sales in January year over year. So it looks like although we had a record-breaking January in closings and volume, the pendings seem to have cooled off, meaning we should expect slightly fewer closings in the next 30 to 60 days compared to last year. However, when you look at the number of pendings for January, you can see that we're well above the average number of pendings going all the way back to 2012, indicating we should have an outstanding first quarter equal to or better than the first quarter of 2021. And although pendings have cooled, demand continues to hold strong. In fact, the MLS reported that over 19% of the homes sold in January sold above list price. This is double the average over the last decade, indicating very strong demand for housing and a short supply of homes for sale. And as always, we like to keep an eye on what's happening at the interest rates. Now, in order to predict where the interest rates will go, you have to look at the 10-year Treasury yield. Although the Fed does not directly control interest rates, they do control the 10-year Treasury yield. Now, by raising or lowering the Treasury yield, they hope to influence the interest rates. In other words, the Treasury yield and the interest rates have a symbiotic relationship. When the Treasury yield goes up, so does the interest rates. You can see in this chart that the 10-year Treasury yield has skyrocketed in the last 3 months, from 1.43 on December 1st, 2021 to 1.81 on February 1st. So we can expect interest rates to follow. In this chart, you can really see the relationship between the mortgage rate and the 10-year Treasury yield over the last 50 years, going back to the 1970s. Over the last 5 decades, the average spread between the 10-year Treasury yield and the interest rates is around 1.7. We also like to look to the experts. We average the predictions of Freddie Mac, Fannie Mae, the Mortgage Broker Association, and the National Association of Realtors, and we come up with what to expect moving forward. As you can see, we expect rates to increase to above 3.75% in the fourth quarter of 2022. Is this bad? Well, sometimes we need a little bit of perspective. Looking back at the last 5 decades, you can see there's never been a better time to buy than now. But we do expect those interest rates to rise. I hope you found this information valuable. If you're interested in buying or selling real estate, I would love to help. Stay tuned for next week when I'm going to break down February sales and volume. I'm Jim Keaty with Keaty Real Estate. Thanks for watching.